Right now, today, there is a new rule sitting inside your checking account that could quietly cost you hundreds of dollars this year, and almost nobody over 60 has been told about it. I mean that. If you have a checking account and you receive Social Security, a pension, or any kind of retirement income, what I am about to walk you through applies directly to you. And by the end of this video, you are going to know something that your bank teller probably does not even know. Before we go any further, hit that subscribe button right now, because what I share on this channel is the plain truth about your money, without the confusion and without the runaround. And you deserve to have someone in your corner who is going to tell you straight. I know how this feels. You worked 30, 40, maybe even 50 years. You paid into the system every single paycheck. You did everything you were supposed to do, and now here you are, trying to make sense of rules that seem to change every time you turn around. You check your account balance, and something looks a little different. You get a letter in the mail with language that reads like it was written by a machine, not a human being. And you are left wondering, quietly, in the back of your mind, am I missing something? Am I losing money I do not even know about? You are not alone in that feeling. And honestly, you are right to be paying attention. Because the truth is, the system was never built to make this easy for you. It was built to be complicated enough that most people simply give up trying to understand it. But you are not most people. You are here, watching this, because you refuse to leave money on the table that belongs to you. Here is what I want you to sit with for just a moment. There is a specific dollar threshold buried inside these new checking account rules that if you cross it without knowing, can trigger something you absolutely do not want happening to your monthly check. I am going to tell you exactly what that number is and how to protect yourself from it. But first, I need you to understand the full picture, because if I just throw a number at you right now, it will not make sense, and you will forget it in 10 minutes. So stay with me, because this is going to matter more than you think. Let's start with the basic reality of how your money actually moves these days. Almost every senior in this country now receives their Social Security, their pension, or both through direct deposit straight into a checking account. That used to be a convenience. Now it is also a point of visibility, because when your money sits in a traceable account, it becomes part of a much bigger financial picture that different government agencies can see in different ways for different reasons. This is not about anyone spying on you. This is simply about how modern banking and modern benefit programs are wired together behind the scenes. And in the last year or two, some of the wiring has changed. The first rule change has to do with reporting thresholds. Banks are now required to report certain account activity to the IRS at lower dollar amounts than they used to. This does not mean you owe extra taxes just because money moved through your account. What it means is that transactions that used to fly under the radar, quiet, unremarkable, ordinary transactions, are now more visible than before. If you have ever received a large gift from a family member, sold something valuable, moved money between accounts to consolidate your finances, or received a lump sum from anywhere, even a legitimate, harmless source, that activity may now generate a form that gets sent both to you and to the IRS. For most seniors, this changes nothing about what you owe, but it does mean you need to keep better records than you used to. Because if a number shows up on a government form and you cannot explain where it came from, that can create a headache you never asked for. Now, here is where it gets personal for anyone on a fixed income. If you receive supplemental security income, known as SSI, there is an asset limit you have to stay under to keep receiving that benefit. For years, that limit has been shockingly low, just $2,000 for an individual and $3,000 for a couple. And it has not been updated to reflect the cost of living the way your monthly check has. That means if your checking account balance creeps up because you received a tax refund, a small inheritance, a gift for your birthday, or even because you have simply been careful and saved a little, you could unknowingly cross that line and put your SSI benefit at risk. With banking and reporting more connected than ever, this is not a theoretical risk anymore. It is something that is actively being flagged more often, and seniors who had no idea they were close to that limit have been caught off guard. If this describes you or someone you love, this is the moment to actually look at your balance and understand where you stand, because ignorance here is not bliss. it is expensive. The second rule change involves how the Social Security Administration and the IRS share information about earned income. And this one trips up a huge number of people who are still working, even part-time, after they started collecting benefits. If you claimed Social Security before your full retirement age and you're still bringing in a paycheck, there is something called the earnings test. For every $2 you earn above a certain yearly limit, $1 gets withheld from your Social Security benefit. That limit changes almost every year, and in the current year, it is higher than many people realize. But plenty of seniors are still working with an outdated number in their head, either overestimating what they can earn safely or underestimating it and leaving money unclaimed because they are afraid to work more. The connection to your checking account matters here because this is exactly the kind of income that shows up clearly through direct deposit and tax reported. And the systems that used to take months to reconcile discrepancies now move much faster. If you went over the limit, you are far more likely to see it reflected in a benefit adjustment sooner than you would have a few years ago. The good news, and I do mean good news, is that this withholding is not gone forever. Once you reach full retirement age, Social Security recalculates your benefit and gives you credit for the months they withheld money. Your check actually goes up permanently to make up for it. Most seniors have no idea that happens. They think that money is just gone. It is not. But you have to understand the mechanism to make it work in your favor instead of against you. I promised you there was a specific number that could trip people up, and here it is, because you have earned the full picture now. If a single deposit or a series of related deposits into your checking account totals $10,000 or more, your bank is required to file what is called a currency transaction report. This has actually been the law for a long time. But what has changed recently is how aggressively banks are watching for patterns designed to stay just under that number, a practice called structuring, and how quickly that information gets cross-referenced with your benefit programs. Here is why this matters to you specifically. Let's say you sold an old car, or a family member sent you money to help cover a medical bill, or you finally cashed out a small CD you had forgotten about. None of that is illegal, none of that is wrong. But if it pushes your account activity past that $10,000 mark, or if you are on a needs-based benefit like SSI and it pushes your total resources over that tiny $2,000 limit, it can trigger a review. A review means paperwork. A review means delays. And for someone counting on that monthly check to cover rent, medication, and groceries, even a temporary delay can feel like the ground shifting under your feet. Knowing this now means you can plan ahead, document your sources of income clearly, and never be caught by surprise. Let me pause here and address something else that has millions of dollars sitting unclaimed every single year. Because we are already talking about money seniors do not know they are entitled to, and this one deserves your full attention. Spousal and survivor benefits are some of the most underused parts of the entire Social Security system. If you were married for at least 10 years, even if you are now divorced, you may be entitled to claim benefits based on your former spouse's work record, and it does not reduce what they receive one single penny. If your spouse has passed away, you may be entitled to survivor benefits that are actually higher than what you are currently receiving on your own record. And switching to that higher benefit is something you often have to request yourself. Nobody automatically switches you over. The system waits for you to ask. Think about that for a second. The government is sitting on money that is legally yours, and the only thing standing between you and that money is a phone call or an application you did not know you needed to make. I have seen cases where a widow was receiving her own modest benefit for years, never realizing she was entitled to significantly more through her late husband's record, simply because nobody told her to check. Now let's talk about Medicare, because this is the third piece of the puzzle, and it connects directly back to that checking account of yours. Most seniors have their Medicare Part B premium deducted automatically from their Social Security check before it ever hits their bank account. That means the number you see land in your checking account every month is not your full benefit. It is your benefit minus that premium. And if you are not paying attention, a change in your Medicare premium can look exactly like a mysterious drop in your Social Security payment. Here is the part that catches people off guard. If your reported income from 2 years ago was higher than usual, maybe because you sold a house, cashed out a retirement account, or had some other one-time bump, you can be pushed into a higher Medicare premium bracket called an income-related monthly adjustment amount. That adjustment can add real money, sometimes hundreds of dollars a month, onto your premium, and it gets deducted automatically, quietly. without a dramatic announcement. If you ever see your check shrink and cannot figure out why, this is one of the very first places to look. And the good news is, if that income spike was a one-time event, like a death of a spouse, retirement, or a work reduction, you can actually file an appeal to get that adjustment reversed. Most people do not know that appeal option even exists. So let's bring this all together, because you deserve the full payoff after everything we just covered. The checking account you use every single day is no longer just a place where your money sits quietly. It has become a window that different parts of the government can look through in different ways for different programs, and the rules about what triggers attention have genuinely changed in ways that affect real people on fixed incomes. The specific numbers matter. $2,000 in resources if you are on SSI, $10,000 in transaction activity that triggers automatic reporting, the earnings limit that determines whether working part-time costs you now but pays you back later. These are not abstract policies. These are the exact tripwires that determine whether your check arrives in full, on time, without a single problem. You worked your entire life for this. You paid in every paycheck, every year, through good times and hard times, and you earned every single dollar of what you are receiving now. Nobody handed this to you. You built it, decade by decade, and you deserve to receive every cent you are owed, without confusion, without unnecessary delays, and without some outdated rule catching you off guard because nobody bothered to explain it to you in plain language. That is exactly why this channel exists. I am not here to sell you something. I am not here to make this sound scarier than it is just to get a reaction out of you. I am here because you deserve a straight answer from someone who respects you enough to give you the whole truth.
If this video helped you understand your own money a little better, do me a favor and subscribe, because I put out videos just like this one regularly, breaking down exactly what is changing with Social Security, Medicare, and retirement benefits, in plain English with no jargon and no runaround. And please, share this with your spouse, your sibling, your neighbor, anyone you know who is living on a fixed income and deserves to understand what is really happening with their money. You checking that box, hitting that share button, might be the exact thing that saves someone you love from a mistake they never saw coming. You have earned this knowledge. Now, go use it, and I will see you in the next one.